Should you buy Alphabet stock on the dip? Alphabet reported quarterly financial results that are sending the stock price down by more than 7% in the aftermarket hours. Following the company's earning release, of course, I am disappointed in that I have recommended Alphabet as one of the top stock to buy right now on 2025. But I still think the company is a buy. Do I think this dip is a buying opportunity? I shall answer that question in this video. I shall also review the company financial result and highlight the big picture items, the things that are beyond the obvious revenue and earning per share that are obviously reported by every media outlet. I'm going to look into the details and what it could all mean for investor before I update the recommendation to buy, hold or sell on this dip, of course. I also touch on my valuation metrics for Alphabet stock. Alright, so one of the things I am paying close attention to with Alphabet is the search business and now how it is evolving, because one of the biggest risk right now is how large language model like ChatGPT could impact Google search's business dominance. And in the most recent quarter I saw another strong quarter for search, and management even said that in their search business, advances like AI overview and circle to search are increasing user engagement. That's great to hear that user engagement is increasing in this critical segment for the Alphabet. And another number, and I think many investors were looking to Google's capital expenditure numbers or Alphabet capital expenditure number, given all of the investment that are going into artificial intelligence. This number is something that widely vast right now, and Alphabet said that they are confident in the opportunity ahead and to accelerate their progress. They were going to spend 60 to 65 billion in capital expenditure in 2025. So Alphabet's numbers are comparable to those other large cap stock that have already reported earning. Of course, I have not yet evaluated Amazon's earning, and their investment in capital expenditure will also be interesting to evaluate to be sure. But this number and all of these numbers that have come out are great news for Nvidia stock. Investors remember about a two week when Nvidia stock price crashed by 177% because of the development from Chinese DeepSeek, and how that could impact the spending from these large tech companies. And so for these large cap tech companies that are Nvidia biggest customers, they have increased their budgets significantly for 2025. So far so good in that regard. Alphabet saying that the revenue increased by 12% year over year to 96.47 billion, and for the full year revenue increased by 14% to $350 billion. I always find it remarkable that Alphabet generated $350 billion in revenue by offering mostly free product. I find it really impressive. They are able to do that. They deliver great customer value, because free is a great customer value for YouTube, for Google search, for its Google suite, and they are able to generate over $350 billion in revenue. That's truly impressive. And they do that while also generating a operating profit margin of 32%, or in other words, they generated over 112 billion in operating income. I like to sit back and think about that for a minute. They offer free product, and they generated over 12 billion in profit from the offering free product. That's truly remarkable. That's an amazing business model. That's just so lucrative, and it is part of the reason why I have had Alphabet stock rated so highly. It was my top stock to buy in 2024. It got a little bit of downgrade for me for 2025 just because the price had increased by so much in 2024, and because I like one other business better than, at least once better than Alphabet in 2025. But still the business performance remains incredible. Operating margins increased, and revenue growth rate decreased slightly in the latest quarter to 12%, but for the full year it was still up by 14%. So Google search, again a topic, that a segment that I am watching very closely with Google because of the risk from large language model. In the most recent quarter, revenue increase in this segment by over $6 billion to 54 billion, up from 48 billion. So that was a roughly 12% rate of increase for Google search. That's very solid despite all of those risks from large language models. Despite all of the popularity of large language model, Google search continued to dominate this consumer segment. I was also impressed with its ability to keep costs under control, only adding less than 1,000 employees year over year, while overall revenue increased by 13 billion year over year. They did that with only 1000 more employees. So I was pleased to see that. All right, with all of this spending on capital expenditure, I am actually a fan of this for Alphabet to spend money on capital expenditure and less money on employees. Their total cash balance as of December 31st last year, they had $11 billion, and this is, cash that's just sitting around earning the minimum balance like 5% rate of return or whatever the treasury yield will give you. And I have felt that Alphabet can have better uses for that capital, and so I like that they now have, instead of 134 billion due of property and equipment, they have $170 billion of property and equipment. And it is reasonable to assume that Alphabet property and equipment, these are the data centers of IED for AI and the thing like that. It's reasonable assume that these assets will generate a greater return than a 5% government bond, which is what they had their money in mostly previously. So they reduces that balance from 111 billions to 96 billion. If you are new here and you want to see more stock market related content like this, then please consider subscribing to my channel. I'm really excited to share this with you now.